Welcome to the world of cryptocurrency, a revolutionary force that's slowly but surely challenging the global financial system. But could it also be the answer to some of the world's most pressing economic problems? Could crypto create a more equal economy for everyone? Let's break it down. For centuries, the global economy has been controlled by centralized institutions, governments, banks, and powerful corporations that dictate the flow of money. This centralized power has led to rising inequality, financial exclusion, and the concentration of wealth in the hands of the few. But in recent years, a new contender has emerged: cryptocurrency. Cryptocurrency at its core is designed to give individuals more control over their own money, free from the restrictions and influence of central banks or traditional financial institutions. With the promise of decentralization, transparency, and financial inclusion, many believe that crypto could be the key to building a more equitable global economy. But how exactly could cryptocurrency reshape the economic landscape? And what challenges stand in the way of achieving true equality through crypto? One of the most significant ways cryptocurrency can help create a more equal economy is by providing financial inclusion for billions of people who are currently excluded from traditional banking systems. According to the World Bank, nearly 1.7 billion people around the world don't have access to a bank account. For many, this financial exclusion stems from living in remote areas, not having enough money to meet bank minimums, or lacking the necessary documentation to open an account. This exclusion is especially prominent in developing countries, where access to financial services is limited or entirely unavailable. Enter cryptocurrency. Because cryptocurrencies like Bitcoin and Ethereum are digital, they don't require a physical branch or intermediary to facilitate transactions. All that's needed is an internet connection, and anyone with a smartphone can access and use digital currencies. This opens the doors to financial services for people in underserved and unbanked regions, empowering them to send and receive money, save, and even invest in ways they couldn't with traditional banking. Take the example of mobile money platforms like M-Pesa in Kenya. This service has already helped millions of people without access to traditional banks send money, pay bills, and manage their finances using mobile phones. Cryptocurrency could enhance this model by offering even lower fees, faster transactions, and greater security, further integrating financial services into regions that were once left behind. A huge advantage that cryptocurrency brings to the table is its ability to reduce transaction costs, especially for cross-border payments. In the traditional financial system, international money transfers are often expensive, slow, and complicated. Banks and financial institutions charge high fees to send money across borders, which can be prohibitively expensive for individuals in lower-income countries. This means that remittances, a key source of income for millions of families, are subject to a significant fee, with up to 10% of the transaction value going to intermediaries. Cryptocurrencies eliminate this problem. With digital currencies like Bitcoin, Ethereum, and stablecoins, people can send money across borders at a fraction of the cost and in a matter of minutes, not days. This drastically reduces the barriers for families, small businesses, and individuals who rely on cross-border payments to survive and thrive. By lowering the cost of financial transactions, crypto is empowering individuals and communities that were previously at the mercy of expensive intermediaries. This in turn can help reduce the wealth gap by enabling more people to access financial tools and resources that were once only available to the wealthy. At the heart of cryptocurrency's potential to create a more equal economy is decentralization. Unlike traditional currencies, which are controlled by central banks and governments, most cryptocurrencies operate on decentralized networks. This means that no single entity can manipulate or control the currency. In a decentralized financial system, the rules are enforced by algorithms and consensus mechanisms, not by institutions that may have their own agendas. This offers a level of transparency and security that is difficult to achieve in centralized systems. With cryptocurrencies, people can be their own banks, taking control of their financial lives without needing to rely on institutions that may not always have their best interests in mind. One example of this is Ethereum's smart contracts. These self-executing contracts allow individuals to enter into agreements with one another without the need for intermediaries like lawyers, banks, or notaries. This opens up new opportunities for people to engage in business, trade, and finance without the burden of high fees and lengthy processes. By removing intermediaries and decentralizing power, crypto can create a more transparent and accessible financial system, one that doesn't favor the wealthy or the powerful. For many people, building wealth is a long and difficult process, often limited by the financial systems and barriers that exist in their countries. Traditional investment opportunities, such as the stock market or real estate, are often out of reach for the majority of the population due to high barriers to entry or a lack of resources. However, cryptocurrency is making it easier for individuals to access investment opportunities and build wealth from the ground up. Bitcoin, for example, has seen an astronomical rise in value over the past decade, providing early adopters with huge returns on their investments. While cryptocurrency investments come with risks, they also present opportunities for people to invest in something that operates outside of traditional financial markets. Tokenization is another aspect of crypto that could open up wealth-building opportunities for more people. Tokenization is the process of converting real-world assets, such as real estate, stocks, or commodities, into digital tokens that can be bought, sold, and traded on the blockchain. This allows individuals to invest in assets that were previously inaccessible, such as fractional ownership of properties or shares in businesses. By enabling broader access to wealth-building opportunities and facilitating easier ways to accumulate assets, cryptocurrency has the potential to level the playing field and create a more equal economy where anyone, regardless of their background, can participate. While the potential for cryptocurrency to create a more equal economy is undeniable, it's important to recognize the challenges and criticisms that come with it. One of the biggest criticisms of cryptocurrency is its volatility. The value of cryptocurrencies like Bitcoin can fluctuate wildly in a short period of time, which makes it difficult for individuals to use them as stable stores of value. This volatility can create significant risks for people who are trying to use crypto as a means of saving or building wealth, especially in countries with already unstable economies. Another major challenge is the digital divide. While cryptocurrency has the potential to increase financial inclusion, it also requires access to technology and the internet. In many parts of the world, people still lack access to smartphones, reliable internet, and the technical knowledge needed to use crypto. Until these barriers are addressed, the benefits of crypto may not reach those who need it most. Cryptocurrency is still in its infancy, and governments around the world are struggling to establish clear regulations. The lack of regulatory clarity creates uncertainty and could hinder crypto's growth, especially if governments impose harsh restrictions on its use. If crypto is not regulated properly, it could be used for illicit activities, further contributing to inequality rather than solving it. If you're looking to invest in cryptocurrency and want to ensure that you're safeguarding yourself while promoting a more equal economy, here are some steps to consider. Diversify your investments. Crypto is highly volatile, so it's important to diversify your investments to minimize risk. Don't put all your money into one cryptocurrency. Spread your investment across different assets. Do your research. Make sure to thoroughly research any cryptocurrency or project before investing. The crypto space is rife with scams, so being diligent can protect you from bad investments. Use secure wallets. Store your crypto in a secure wallet, preferably a cold wallet, so that your assets are protected from hacks or theft. Stay updated on regulations. As governments continue to regulate crypto, stay informed about any legal changes that may affect your investments. In conclusion, while cryptocurrency alone cannot solve all of the world's economic problems, it holds immense potential to create a more equal global economy. By providing financial inclusion, reducing transaction costs, decentralizing power, and offering new opportunities for wealth building, crypto could level the playing field in ways traditional financial systems have failed to do. However, challenges like volatility, the digital divide, and regulatory uncertainty must be addressed for crypto to truly realize its potential as a tool for economic equality. With continued innovation and thoughtful regulation, cryptocurrency could very well become the foundation of a more inclusive, fair, and equal global economy. So could crypto create a more equal economy for everyone? The answer is yes, if we take the right steps to ensure its benefits are accessible to all.